welcome to Regional Property Unplugged again for this beautiful Tuesday. Mark's out and about. He's over in New South Wales at the moment, in between jobs. And we have
no mask country.
Yeah, beautiful. No mask country. Lucky you. And we've got an amazing guest today, and we've got Pete Palazzo from Essential Insurance Solutions. So welcome to you, Peter.
G'day, everyone. Good to be here.
All right, before we get to ask Pete some questions, just a quick wrap up, Mark. What's happened over the weekend?
Okay, so weekends aren't as busy naturally as what they normally are because we still can't do opens. We obviously had some disappointing news yesterday with the restrictions staying quite similar to what they already are, which is tough. But I guess we're still doing plenty of private inspections over the last 2 weeks. Plenty of activity, plenty of buyers. So yeah, I've had a few chats to some of the guys down in Melbourne, and I feel really sorry for them. That they are, they're just sitting in their homes and they're twiddling their thumbs. There's not much they can do. So we are extremely lucky compared to what's going on down there. So, but in saying that, it'd be lovely to be back doing open inspections and making life a little bit easier, but we're not complaining.
Yeah, cool. That's cool. Very good. All right, I think we should just get straight into it with Pete. Tell us about what you do, how long you've been in insurance, and we'll get into and ask you some really cool questions to help our listeners out.
Sure, no worries. Insurance, not the most sexiest subject in the world, but it's one of those things. I've been in the general insurance business now for about 21 years. So I've been out on my own with my business for about 8 years now. So really enjoying that. As an insurance broker, we're part of a couple of cluster groups. So Steadfast is the largest cluster group of brokers in Australasia. So there's quite a few thousand brokers in Australia and New Zealand. So we're part of that group. So probably the easiest way to describe it, I guess, would be that we're your local insurance broker here that knows the area, born and bred in the area, but have the backing of that larger national group that provides a lot of compliance support, a lot of those backroom support that we get. Policy wordings are exclusive through our group that you can't get in the general marketplace. So it's kind of best of both worlds. As I said, you've got the security of the national group behind you, and then the local broker in your area. So never dull.
So is it kind of like sorry, mate. I was just going to say, it's kind of like having buying power as well. You're part of a big group, so you get, better discounts, etc. But then you've got the ability to shop around like a finance broker.
That's right, exactly. So we kind of do the legwork, I guess, of what the individual would do. I mean, you could read, looking through all these PDSs or policy wordings in front of me, you could read all of those and lose a couple of hours that you'll never get back again. Or deal with an insurance broker that'll do your legwork. So they'll have a chat with you and find out what your circumstances are, and then go to market on your behalf and come back with options. So insurance can get a bit technical sometimes and a bit confusing, but we try to take, I guess, the confusion out of reading those policy wordings.
It is actually really confusing, isn't it? Because I sort of think, there's lots of questions I want to ask you today because I haven't really looked into it. I'd rather just, palm it off to somebody else. But, how much do I insure my home for? Like if I purchase it for $500,000, do I insure it for $500,000? Yeah,
and that's a really good question. Generally, we'll get someone ringing up saying they've just bought a place, and when we talk about how much you want to insure it for, they'll say, well, I've paid $500 for it. But obviously that includes the land. So from an insurance point of view, we need to know what the replacement value would be. And we always talk in circumstances where it's worst case scenario. So let's say, for example, the house burns to the ground tomorrow. Hopefully it never does. But if it does, what will it cost you to rebuild that home again? And so that's the figure that we need to work out what sum insured to insure you for. So I know, Mark, when you probably got a bit of an idea what the land component might be. We quite often get phone calls from clients that they'll make a rush decision in that the bank will want them to insure it straight away because they need the finance to go through. And it's not necessarily front of mind as far as when they're going through the purchasing process, but it is obviously pretty important. So in answer to your question, the replacement value is what we need to know.
Okay.
And keeping in mind the replacement value of the building is your dwelling and any outbuildings on your property. So shedding, even things like in-ground pools, anything that's fixed to the building, might be solar panels, which a lot of people are putting in now. So you need to factor those things in.
Is that something we determine ourselves?
No, listen, we've got some pretty good calculators. I mean, we're not property valuers, so we're a little bit restricted with giving people an exact figure. But we've got some calculators. There's one on our website, which is actually being updated as we speak, where you key in some information about how many bedrooms, what the construction is, how old it is, whether you've got in-ground pools, how big your veranda is or outdoor areas, and it'll come up with a figure. The good thing about using those calculators is that the policy wordings will then give you a bit of a backstop of around, they vary from policy to policy, but some are around the 30%. So if you use those calculators that we have on our website, if you insure your house for 500, you've really got another 30% on top of that if you find that you did underinsure.
Yeah.
Okay. But I always say to people, you're better off being over than under, and the premium difference between 500 and 530 might be $150 a year, if that, in some cases. So, you know, don't leave yourself short.
Pete, when we sell a property, one of the first things that I advise a buyer to do is to grab a cover note, because they have they suddenly have a financial interest in the property. Yep. So the process there is pretty simple, right? They go get themselves a cover note, and then once it's once it's settled, you know, you obviously arrange the insurance prior to settlement to work all those figures out. You discuss, you know, the make of the home, whether it's brick, conite, etc. It's a fairly lengthy process, or if there's a buyer there listening, is a pretty simple scenario.
No, it's fairly straightforward once we know the property. And the good thing about your websites as well, or when you've got your links on that property, is we can sort of have a look at those as well to get some idea of a bit of a ballpark figure of what we might be looking at. And then we'll work with the client to, you know, to obviously work on what we think that replacement value might be to the best of our ability. So yeah, it is fairly straightforward. And you're right, you need to put that cover note on there generally from the time you sign your contract note. Yeah. And keeping in mind your insurance is a moving target. So it's one of those things that people don't realise, that they think that once it's locked in, they can't make changes maybe until renewal next year. You can make changes during the course of the year. So an example we had last week was someone put some solar panels on their home. Now, because that's part of the building, they increased their sum insured up $20,000 to reflect those solar panels they put in. You can do that whenever you like during the year, and then the insurance company will just charge you a prorated extra premium to increase your building sum insured for that period of time.
That's a good point, actually, because that would really go for renovations and extensions, and some people might not think to go to their insurance company before they start renovating and not wait till after it's all finished to increase the value.
Yeah, spot on, Shona. Yeah, we see that quite a bit. And you want to do it before the event, not after the event. So you don't want to get a nasty surprise and realise that you were underinsured. So important you're doing that and reviewing it during the course of the year.
So if you're about to start a renovation, would you talk to the insurance company before to get some sort of something in place? Because obviously over time, as it gets built or extended or whatever happens, you're actually adding value as it goes along, correct?
Yeah, for sure. Yeah. And it's just about communication with your broker or your insurer, just to make sure that you're always on top of those things. With renovations, it's important to know that if you're doing major renovations, and generally the threshold is 75,000, where they consider it to be a sort of a major reno, you'll probably find that under those circumstances, there'll be a builder's insurance in place, construction type policy in place that would then pick up the renos as well as the value of your home during that construction period. So people are just renovating bathrooms and kitchens. Generally, it's under $75,000 and they're covered automatically under their building insurance. But good idea to check on that. Sometimes people start a small project that turns into a big project, and there could be potentially some exclusions in their policy wordings if it turns into what's called a construction type risk as opposed to just a normal reno.
No, that makes
it's all about the fine writing, isn't it? Like you often hear about those stories about people that didn't realise that something in particular wasn't covered under the particular policy, and I guess that's the beauty of having someone local to make sure that local scenario obviously we don't have hurricanes here and things like that. So it's important that we're getting covered for the right stuff that's relevant to us.
Yeah, that's right. And without pushing our own barrow, I suppose that's one of the advantages of using a broker. I mean, we don't work for the insurance companies. We're independent. We work for our clients. So it's our duty to make sure that we're supplying the correct advice and the correct products that suit our clients' needs. So, otherwise the buck stops with us. And that's where I guess it gets a bit confusing with the different policy wordings out there. And we see it all the time where it's the old, you get, you pay for. I know there's a couple of classic examples with fusion claims, for example, particularly in Mildura, where air conditioners can be working 24/7 during those really hot periods, where if an air conditioner motor fuses, is that a claim? With a lot of what I would call inferior products, those items or covers have got to be chosen as options. So you've got to tick the box and say, I want fusion cover, I want cover away from home, I want cover for my valuables more than the standard limit, which might be $500 per item or $1,000 per item. And that's where you can get yourself in a little bit of strife if you don't take the options. The policies that we sell tend to include most of that automatically. So it takes a lot of the guesswork out of it. We had 2 claims last week or in the last couple of weeks for replacement of air conditioners that had fused, couldn't be repaired. So they actually were able to claim for a brand new replacement of those air conditioners, and they were both about $10,000 each. So if you don't choose to take the fusion cover, or you've got an inferior product that might, for example, only cover you up to 5 years old before it becomes just a wear and tear issue. So in other words, you have a fusion on a motor that's over 5 years old, no cover. Whereas ours cover you up to, some of them cover you up to 20 years old. And let's face it,
you're 10 grand down.
Yeah, and you're more than likely going to have a claim when it's over 5 years old. When it starts, it's done a fair bit of work, and
especially in Mildura, especially in St. Asia.
Yeah, exactly right. So
a little bit of added red loam just to affect the inner workings of the air conditioner.
Spot on, Mark. Exactly, that's right. So getting back to that, I guess that's where people tend to get confused with. There's effectively, in simple terms, there's 2 different types of home policies you can buy. One's called a listed events policy or a defined events policy, and the other one is called an accidental damage policy. And the listed events policy covers you for all those main things you might expect to be insurance claims: fire, theft, malicious damage, storm damage, wind damage, leaking pipes, those things that you predominantly are covered in most policies. So if it's not one of those listed events that's listed, hence the reason they call them listed events policies, then it's not covered. Whereas an accidental damage cover will cover you for all of those things that are covered under a listed events policy, but gives you a broader cover in that covers all your contents away from home as well, and also gives you that accidental damage cover. So being a lot broader, they tend to cover you pretty much for everything unless it's listed as an exclusion. So a lot broader. In a perfect world, it's the only product that we would sell, because at least we know that when a client rings, 9 times out of 10, we're going to say, yep, that's a claim. It's not a drama. Get it fixed, supply us with a receipt, and we'll arrange the rest for you if it's a fairly straightforward claim.
I can't imagine it'd be easy someone ringing up for a certain claim and having to tell them that they're not covered.
Yeah. Not a conversation we like to have. Hence the reason, we've got to
get it right at the start.
Yeah, exactly. And then there'll be some cases where people just want a very basic policy and are really premium driven, and we get that completely. And that will become more evident, I guess, maybe in the future as things get a little tougher for some people. They might start looking at the cover they've got. It's probably the worst time, to be honest, to be reducing your cover, because if you are financially struggling a little bit and you do have a claim, you might not be in a position to be able to replace that air conditioner, for example. Or replace that item that you lost, or the mobile phone that you dropped in the toilet, or whatever it might have been. So
are your mobile phones covered? Yeah,
definitely. Yeah, we see a lot of claims on mobile phones. I mean, depending on what your excess is on your policy, you might find that if you've got a $500 excess, for example, that maybe it's not worth it in some instances. But a mobile phone these days, $1,100 or $1,200.
Yeah.
So if you lose your mobile phone, if you run over it, if it's damaged in some way under that accidental damage policy I mentioned, you've got cover.
Wow. Okay. I didn't know that.
Yeah.
Cool. So, what was I going to say? I need to ask you a question about in transit, your contents insurance when you're moving from home to home in transit, are you covered?
Yes, you are. Yeah, moving from one home to another. Yep. And a lot of policies will give you cover in a storage facility as well, a commercial storage facility. So if you need to put your contents into a commercial storage facility for a period of time while you're waiting for your house to be finished, for example, or you're moving, then you've got cover there automatically under your policy wording as well.
Awesome. But you need to notify them, right?
Well, you should ring up your insurer just to make sure you've got that cover.
Yeah.
But once again, the policies that we deal with will give you that automatically. But if you're not sure, ring up, double check. You don't want to find out after the event that you weren't covered.
Cool. Excellent. So coming into summer, are our swimming pools covered by insurance?
Yes, they are. So
in-ground
swimming pools are covered under your building sum insured, and that's getting back to what we spoke to about earlier when you're coming up with your replacement value. You need to factor that in.
Yeah.
So, and above ground swimming pools are covered under your content sum insured. So you need to allow for that as well. But yeah, definitely covered. We don't see a lot of claims on the pools, in-ground pools themselves. It's more so the motors, for example, that might fuse, the pumps and motors. That's obviously a claim under your fusion component of your policy. If you've got the right policy, I keep going back to, there's so many different variants in the wordings, but if you've got fusion cover, then your pools and pump motors are covered.
Oh, wow, really cool. And leakages, fixing leaks.
Yeah, leaking pipes as well. So leaking pipes are a classic. We see a lot of claims on leaking pipes, and it's probably not until you see maybe a water stain in your wall that you even realise that you may have had a leaking pipe in the wall. So all the resulting damage from that is a claim. So whether tiles have to be removed or bathrooms taken apart to get to the leaking pipe and then put back together again and replaced. Any leaking pipes or in those situations would be covered under your policy. I guess I've got to be careful in saying that would be covered under your policy. I'm talking about the policies that we sell in those top of the range policies. Yeah. There'll obviously be certain policies out there will have certain exclusions. So I guess we need to highlight that.
Yeah, cool.
Is there, Pete, on this, like obviously if someone's about to do a renovation or has got a pool and isn't sure about their current situation, is it easy for them to just give you a call and do like a health check on their current insurance policy? So they may be using a national company there where at the moment, you got to ring up and talk to a computer for 5 minutes before you get anywhere. Yeah. Is it a simple scenario? Do you look at their current policy and say, okay, yep, you're covered here, but you're not covered here. Yeah. This is something I recommend, and you switch them to something that works better?
Definitely. And that's the other advantage of using a broker, I guess, is that we're taking into consideration their best
what the client needs. What the client wants and needs. Yeah,
exactly right.
Very cool.
Beautiful.
So getting back just how you were talking about your calculator before for your house insurance. Do you have one for contents as well? Because that can be very confusing. Yeah,
listen, they can be. I mean, there's good and bad with it. I'd sometimes find that when you put in the information, it'll come up with some odd figures. But it's certainly for people that've got no idea, short of you walking through your house with a clipboard and jotting down everything that you've got in your home. And a lot of people will forget with contents of things like linen and cutlery and footwear. They'll think of their electrical appliances and their white goods and their furniture, but they'll forget about all those other things. So it's important to consider and always think worst case scenario, that you've got to go out there tomorrow and buy everything new for old because it's replacement value, remember? So you've got to think in terms of what it would cost you to go and buy that item today. We've got a claim going at the moment it was a total loss where unfortunately they've lost their home and their contents, the whole lot. They're currently living in temporary accommodation, which the insurance company supplies you with. So they'll have 12 months worth of temporary accommodation while their new home's being built. They have already been paid out for their contents. So that money's now sitting in their account. They can start buying things as they need to. They won't start buying their bigger type items until they're ready to move into their home. But the insurance company have already paid out their content sum insured now in anticipation for them moving into their new home in 12 months' time, whatever that may be.
So that can be processed pretty quick. Sorry, Mark. Can that be processed pretty quick?
Yeah, well, something like that's quite can be quite complex. An assessor will get appointed So the assessor will basically hold the insured's hand to a certain degree, along with the broker, to make sure that it's, because it is obviously a terrible thing to have gone through, to make sure that they make it as painless as possible for the insured. And this particular case is running as smooth as it possibly can. It's going well. So under the circumstances.
Yeah, okay.
So,
You've got permission to speak now, Mark.
Go, Mark.
I think I'm on a bit of I'm all the way in Wentworth, and I think I'm on a bit of a 3-second lag. So I go to say something, and then you hear me 3 seconds later.
Yeah.
It's what you get for being so far away. I was just going to say, if they put 30 grand in my bank account, you know, for house and contents, I'd probably spend about 15 grand of that on shoes.
Yeah.
You'd have to-
No doubt. Oh, you would, Mark. You're probably, yeah. But it's a really good point, because more often than not, they bring out stats quite often showing the number of people that are underinsured. And I can't think of the latest stats, but it's not a good figure. It's something we don't like to see, because it's not until people have a claim they realise that they were left a bit short. And what's frustrating from their point of view is the premium difference between what they had and probably what they should have had may not have been all that expensive anyway. So for the sake of an extra couple of $100, they may have had an extra $20,000 worth of cover, for instance.
But there's no limit.
Sorry, what's that?
Sorry, there's no limit.
No,
Like, an insurance company won't say, okay, look, that's just way out of proportion.
No. Well, if it was something like $500,000, they may ask a few more questions about why is it so high. But some of the houses in Melbourne that are worth $10 or $20 million, for example, probably not unusual for them to have $500,000 or more.
Yeah.
In contents, because they've got the top of the range of everything. So I sort of see it the other way. Someone will walk in the door and say, "Oh, I've got, how much do we need to insure your contents for?" And they'll say, "Oh, probably $20,000 is enough." And once you explain to them that curtains and carpets are part of your contents.
Right.
So to recarpet and curtain your house, recarpet and curtain a home might be $10,000 just there. And then start talking about laptop computers and your mobile phones and your lounge suites and your smart TV, and they go, yeah, 15's not a lot at all. So, it certainly varies from one person to another, but it's something to keep an eye on.
When you look at how much stuff you own in the kids' games and PlayStations and washing machines and all that sort of stuff, it would add up, wouldn't it? If you're trying to replace everything. Definitely. I remember when I was young, I was 18, I came back from uni and Mum put all my washing on the line and I got stolen, and I got $1,000 for all my clothes.
Mark,
and I got 2 pairs. I got 2 pairs of jeans and 3 shirts, and that was all I had for the next couple of years. I literally had everything stolen, but it doesn't go far when you're trying to buy stuff new.
No, that's right, exactly. And like I said earlier, it's new for old, so it certainly adds up.
That's cool. Can we jump over? Do you guys handle landlord insurance?
Yes, definitely. Yeah. And
so
I'm glad you raised that, Shona.
Yeah, cool.
Pretty much landlord's insurance can be similar to a normal home policy in that it's covering the main asset, the building itself. So that's pretty standard on both policies. But the additional cover you get with the landlord's policy are things like loss of rent. So let's say, for example, there was a fire or a storm and the tenant had to move out for a period of time and the rent you were getting was $300 a week. It'll continue to pay that rent until the repairs have been conducted and the tenant can move back in. So that's loss of rent. You also get landlord's liability insurance, which protects the property owner in the event that the tenant sues the property owner if they were injured in some way. And then it came back on to the property owner because maybe the property wasn't kept up to speed, someone got an electrical shock, or they tripped over some frayed carpet, depending on what the situation was, but it might fall back onto the property owner. So you get property owner's liability. You can also take things like rent default, which at the moment, a lot of insurers have put an embargo on that at the moment because of the current situation with COVID-19 and not knowing whether you can actually evict a tenant. It's quite a complex grey area at the moment, but rent default is something else that you can take in the event that your tenant does default on their rent. But to trigger that, you pretty much need to be evicted. And at the moment, landlords really can't evict a tenant. So there's a bit of confusion whether that's going to be available going forward, or it's not really. With a lot of insurers are not offering it at the moment, but they'll end up offering that again when things settle down.
Yeah. Okay.
So Yeah, and things like, theft by a tenant, malicious damage by a tenant, all of those things are covered under a normal landlord's policy to protect your asset for you.
I had an investment property in Redcliffe, and they simply a pipe burst underneath the house.
Yeah.
They didn't actually realise, I don't know how, but the whole house semi-collapsed. The stumping all shifted, and the walls separated from the floor. And I was so thankful I had landlord's insurance for that fact. That actually, like you said before, not only did it get fixed, but the whole time that it got fixed, I actually received the rent. We had to get the tenants out that day. It was that bad.
Yeah.
So, very, could have gone the other way. If that was something that I didn't have insurance for, probably would have cost me $30,000 or something like that. Right. So,
exactly.
Yeah, very, very lucky.
Did you have to cover the tenants' accommodation, Mark, or what happens there?
No, it was just all sort of happened really quick. We just said you've got to get out, and they found a place to go because the builder went out there and said potentially that the house might collapse because it just literally split in half. So, it ended up getting fixed, and it was great. So, very, you just got to be careful. You got the right cover that protects the right things.
That's right. And in most situations, people that have got investment properties have got a mortgage attached to that as well, so they need that rent coming to pay the bank. So if that stops, then you might be in all sorts. So it's important to have that income coming in situations like that. So,
is it compulsory to have landlord insurance? Like when the banks, when we go for a mortgage, the banks will say, okay, you need a policy. Is it when you've got going for a loan for an investment property, is it compulsory to have landlord's insurance?
Well, I want you to have the building insured, Shona. So because if they're taking an interest or a mortgage over that building, it has to be insured. So they want you to take out a policy to cover that building. When you take those other options, the rent default and the loss of rent and all of those other bits and pieces is really up to the individual, but the bank will want to make sure you've at least got the building insured. So in the event of a major event, or if they've got to come and sell from underneath you, they'll get an asset that's insured.
Cool. Very cool. Have you got any more questions, Mark? I think I'm all out, unless you've got some tips, perhaps.
Not the only thing that I always, again, advice from when we're talking real estate transactions to, I always sit down with the vendor after we sell and make sure they don't cancel their policy on the day of settlement, because at the moment, and always there's delays with settlement. So if you cancel your policy on the day of settlement for some reason and they forget, 2 days later there's a delay in settlement, and then something happens between that time. So there's just those little things that we always try and make our clients aware of. Because they think, the house settles on Friday, let's just cancel it. And then for some reason there's a slight delay, and then, something goes wrong. So
you're just adding value, not just out there selling a home. We see that all the time. We'll get people ringing up or sending us an email saying, my house is settling on Friday the 15th. Can you cancel my policy on that date? Wait until it's gone through and the money's in your bank, because it's like you said, it's not unusual for settlements to be delayed. And you'd hate for something to happen in that period of time when it's been cancelled and it hasn't settled yet.
Again, it's just a lot of people just assume that's the right thing to do, isn't it? And but
that's right. Exactly.
It's just that awareness, and it's something that I always make sure I'm aware of telling them, because of the fact that anything can go wrong, and you want to make sure that's they're covered.
Yeah, for sure. Shona, we're going to talk about, I guess, just a couple of tips and traps.
Traps. I love it.
Well, the traps, I guess I covered off a little bit earlier, in that it's you get what you pay for. Be very careful when you're taking a policy that you may be considering the options that are available that might cost you a little bit more, but there's a reason why you should seriously consider them. The fusion one's a classic example. Jewelry is another one that we see people getting into strife. A lot of policies will only cover items of jewelry with a sublimit of, let's say, $500 per item, or maybe $1,000 per item. Ours will give you cover up to $10,000 an item automatically without having to specify them and list them on your policy. So there's some of the differences, but and remember, the listed events policy we spoke about earlier would only cover you at your own home. So if someone broke in and stole that item, then that's okay. You're covered up to whatever the sublimit might be. Under an accidental damage policy, you're covered Australia-wide. And in fact, that'll give you cover, I think it's about 180 consecutive days overseas cover as well automatically, which Obviously, we're not going to be seeing many of us going overseas for a while, but the accidental damage policy automatically covers you overseas as well for 180 consecutive days is generally standard in most of those wordings. So if you lost, an expensive watch or an earring or a necklace, whatever it might be, then you've got cover to replace that item that you've lost. So, as I said, important that if you've got some items that are maybe a little bit more expensive, whether it's a watch or an engagement rings are probably the ones that we see a lot of, that might be worth, let's say it's worth $5,000, that a lot of policies will only give you a sub-limit of maybe $500 or $1,000 for what they call valuables or jewelry items.
Yeah.
Anything over and above that needs to be specified, and then you pay extra for that.
Yes.
Whereas the policies that we're talking about that we sell will cover those up to $10,000 automatically, and up to 20% of your total content sum insured. So it's kind of and I guess that's, as I said, there's a reason why there's sometimes price differentials between policies. And as I said earlier, sometimes you get what you pay for.
Yeah.
And maybe I'm a little bit biased from my point of view, and I'm a consumer as well, so I've got to go and buy insurance.
Yeah.
It is your biggest asset generally. You want to make sure that you've got it covered correctly so you don't get any nasty surprises. So as I said, the jewelry ones, always keep an eye on that. Keep an eye on your fusion. In an ideal world, it's great if you can maybe take a bit of an inventory of your contents. Now with mobile phones, go and take some photos of, just walk around your house and maybe keep that somewhere safe, or take some photos and keep them somewhere safe. One of the things we ask for if someone does lose an item of jewelry, for example, is proof of ownership. And people may still have receipts, but if you can provide maybe some photos of those, sometimes they've been family heirlooms have been handed down. You might not obviously have a receipt, or maybe don't even have an idea what they're valued at. So it might be worth getting a valuation of those items, and then keeping your valuation as your proof of ownership, and just taking a photo of that item.
Okay, so that'll do, because I was going to say some of us just don't like paper trails, so in keeping that paperwork.
Yeah.
But so a photo will suffice. That's fine.
Yeah, that's fine. We quite often say, have you got a picture of you maybe wearing that necklace? When you went out they'll say, oh, I was wearing that. I think I've got a photo of myself wearing that item. I mean, it's not going to be a deal breaker as far as them denying a claim if you can't prove it. It just makes the claim process run a lot smoother if you can provide that up front. And that way we can settle the claim as quickly as we possibly can.
Awesome.
Yeah.
How fast are the, like I know we asked before, but some claims can be like a couple of days, yeah?
Yeah, they're very straightforward claims where people can provide proof of ownership, for example, and a quotation, and it's quite straightforward. We can have claims settled within 48 hours. Some of them are even quicker than that, with some.
Yeah.
But I think the most recent one we had where we could settle it straight away was pretty much as I was on the phone lodging the claim for the client, they asked for the client's EFT details, and the money was in their account within 5 to 7 working days. So the claim was settled pretty much on the spot. So, I mean, claims can vary depending on what information is required, and how complex they are. But yeah, certainly if it's a straightforward claim, they can be settled very quickly.
And if you've got someone doing it for you, the headache's gone, yeah?
Yeah, and that's the other thing that we do as a broker, is we're sort of the advocate, I guess, through that whole process to make sure it comes out the other end, and that everyone's happy. And once again, that's, I guess, the advantage of having those products that give you broader cover, because you know that, when Mark rings and says that someone's pinched his G-string off the back of his clothesline, the leopard skin ones that he wears, that we
you wanted to say that before, didn't you?
Brought it up. So
you remember the uni days, mate. You know what they were like.
Yeah, exactly. Yeah.
Your policy's pretty high.
We're basically on live TV. It's done now.
It's done now.
But I guess in summary, like we said, there's the two different types of policies where people get confused, and every insurance company will give them different names. So that listed events policy that I mentioned, they might call that their base policy or their silver policy, as opposed to the platinum policy or the gold policy. And generally that's the two, the listed events compared to the accidental damage, are those two that to be very careful of. Quite often we'll get people saying, we've received a quote and we'll say, it seems quite competitive. Can we take a look at that for you? And once we drill into it, we can see that it's a listed events policy, and they previously had an accidental damage policy, which provided them a lot more cover.
Yeah.
But in saying that, you know, for some people, they just want to make sure if the house burns down tomorrow, they've got cover.
Yeah.
And that's fine.
Yeah.
That's why those products are on the market. So I'm not
Yeah.
saying everyone has to have that top of the range policy, but just be mindful that there are differences between the two.
I think it's great. I think if you can talk to a broker, you know, we all work hard for what we have and what we've accumulated. So it's worth it just to make sure that everything's ticked off, covered.
Yeah.
For anyone, any of the business owners listening, obviously that's a space that you play in as well. It's not just for home content. It's also you deal with business people as well and their businesses.
Definitely, Mark. Yeah, we love dealing with local businesses. And we're effectively a local business ourselves. So, and we've got clients from all different industries, whether it's hospitality, tradesmen, accommodation. There isn't much that we don't do. Professional indemnity insurance, real estate agents. So we do a lot of that sort of business insurance. So yeah, there's not much that we don't do. So yeah, if there's opportunities out there, we love the opportunity to have a chat. And obviously, yeah, it's all no obligation. It's just a matter of and dealing, I guess, with someone local is a bit of an advantage too, that knows the area.
Yeah.
I've got a tip, Shona.
Yeah.
If you want to talk to someone about insurance, Pete's your man. But it's really interesting because I think a lot of people just assume that they've got to go to one of those big insurance companies, get on the phone and get a policy, and then they're all very similar. So I think it's been really good to listen to how you can, or Pete could tailor a situation perfect for you, so you're not caught short when something goes wrong. And I think that's really important.
Yeah, that's true. And people tend to can rush to the decision, not always, but you know, if they get online, for example, what might trigger it is the bank saying you've got to go and get insurance now.
Yeah.
And they'll quickly get online and take out a policy that doesn't suit their needs. And I guess that's where it's best to speak to.
Do the banks still sell insurance?
Yeah, they do. And as I said, I can't sort of speak too much about their products, but you know, that once again, they'll have the options of the two different types of policies. They might not be as comprehensive as the exclusive ones that we have access to, as far as sublimits might be high that we can offer. But once again, that's a situation where people might go, they're in the bank, they're organising their mortgage. It's all happening. It's a busy time. It's exciting. And the insurance or the bank might suggest that, well, let's make life easy for you. Let's arrange your insurance. And that's great. Nothing wrong with that. And some people are very comfortable doing that. But I just be mindful that there are other options out there, and not to, you know, if you're very happy with that product, and as I said, nothing wrong with their products at all. But just be aware that there may be other options out there, and not to rush to the decision, I guess.
Yeah.
Make sure you have
yeah. Is there a fee for us to go through an insurance broker?
Well, brokers all work on commission and broker fees. So pretty much what happens is the insurance companies, and bearing in mind we are independent, so we don't prefer one insurer over another. It's the insurance product that best suits our clients' needs is what we're here to sell our clients or provide our clients. We'll get a commission for selling that product. And then there may be a broker fee on top of that as well to manage the policy for the course of the year. But I guess keep in mind that we'll go to the market on your behalf and come up with, let's say, half a dozen different options. And those premiums might vary, let's say, from $1,500 to $2,200. And the policies might be almost identical. Then we'll provide our client with the options and explain why we would recommend this particular product.
Perfect.
Yeah.
That's really cool.
Beautiful.
Excellent. This has been a great session. Thanks, Peter, for your time.
It's a pleasure.
Really
Thanks,
good information. Yeah.
Right,
really good. So we'll put your details down in the comments so people can get in contact with you. And even if they want to get on your website and have a look around, play with the calculators and then get in touch, we'll have that there for them.
Yeah, happy to chat.
Thank you.
That's great.
Yeah.
Thanks, guys.
Thank you very much. Thanks,
Bye, mate.
Mark.
All right, take care.
See you guys.
See ya.
Take care.